when I was still in college. I started working for a marketing business. Eventually ended up buying that business when I was 27. I think the most successful people are the people that look at businesses holistically. As an entrepreneur, you need to understand your strengths and weaknesses. I'm extremely obsessive compulsive. I like things to be perfect. Cash is king, and focus on that.
Hey everyone, welcome to Business Unchained, where entrepreneurs and business owners come together to power up on their journey to greatness.
Bobby Masha is the founder and CEO of Greenridge Wealth Planning. All opinions expressed by Bobby and his guests are solely their own and do not reflect the opinion of Greenridge Wealth Planning. This podcast is for informational purposes only and should not be relied upon for any financial decisions. Clients of Greenridge Wealth Planning may maintain positions in any securities discussed in this podcast.
All right, season 2, episode 5, brother.
Nice.
Welcome to the podcast. I appreciate you coming in. A couple of things that I want to really hit is just a little bit about your background, right? Your background matters because it kind of tells the story of where you've been and what got you motivated to start your firm and get into the industry that you're in. Let's talk a little bit about mindset of not only the mindset that you've been in and building your own business and growing your own business, but you deal with a lot of business owners at a really vulnerable time in their life. And that's when they're selling their business. So, let's start, give me a snapshot, Iliya, where you're at, DVD partners, how'd you get there? And I'm passing the baton to you. Ready, go.
Yeah, sure. And I don't know how far back we want to go, but like I started working when I was still in college. I started working for a marketing business. Eventually ended up buying that business when I was 27. It was a business down in Mexico. We were doing field marketing. So basically think about when you go to a supermarket and you see people that are organizing the product in the shelves, merchandisers. That's what we did. So we were a third-party employer for companies like Procter & Gamble, SC Johnson, et cetera.
And you did this right out of school?
I did it while I was still in school.
Oh, while you're still in school? Okay.
I was working there and then ended up buying it, a few years after school.
What was the motivation for the person who was selling it?
I mean, they were running it to the ground. So
you just saw an opportunity that you were like, we could do things differently. I can make some money here.
Exactly. And then did a roll up, but some other companies doing the same thing in Central America, et cetera. And eventually exited that business in 2016.
Now, what did you identify when you were boots on the ground, getting this thing rocking and rolling, that was a area of success that the other prior owner just was running it to the ground? Like, what were they missing?
And I think that happens a lot with businesses in general, basic financial acumen. They were operating the business correctly, et cetera, but they were losing money because they were not structuring their financials and their budgeting and their collection. And they were really not thinking about the business from a financial perspective. They always thought it was a marketing business. And I actually think every business is a finance business one way or the other, right? This one is specifically, you had a 90 to 120 day lag between when you provided the service and you got paid for the service, right? But most of what we were doing is payroll because you're hiring people, et cetera. So if you don't structure your finances correctly and have the right sources of capital and your right pricing to the client to price in that cost of capital, eventually you end up losing money. And you end up in a treadmill that is running faster than you can keep up because you're burning money, you're not collecting fast enough. And I think that was the main thing that I saw. And it was recurrent in the industry that people were running into that problem.
I even see that all over the place. I mean, we talk about it all the time. People who are really good at their trade, they get involved in opening their own business. And you say every business is a finance business, but I always look at it as every business is not only a finance business, but also a marketing business. You have to understand the metrics on the finance, but you also have to be able to market yourself and find the right customers or client base to sell to.
Yep.
Most of these people are really good at what they do, which is their, that third component, and they lack in one or the other, one or both of the other two.
Yeah.
So, coming in with that finance, like that's something that you see.
We see it all the time. And I agree 100%, right? Your business is whatever you do, whatever your core is, right? Your business is helping people figure out their retirement and their future and structuring their life in a way that their money and all of their assets going to last them enough for them to retire and be happy, right? It has a huge financial component to it because you're dealing with assets, but it also has a huge marketing component because you need to convince people why to come to you, and you need to be able to articulate that. So,
and operational finance is a lot different than personal finance.
Of course.
So you've got the whole finance side on the back, running the business. Disregard the finance stuff, that we're doing for other people. It's the stuff that we're doing to run a business that really is the consecutive thing across business owners. Right?
Absolutely. Absolutely. But I do see it all the time where people are really good at manufacturing. And they have it down to us. Wait, it's a science, right? It's but they have it down to the perfect degree of how to produce this, have the best product, the best widget in the market, the best whatever piece of metal that goes under a car or above et cetera. They're good at selling it, and sometimes it just sells itself because it's so good that you have stickiness, et cetera. But they miss the financial side of it. How do you make it the most profitable? Sometimes it's the other way around. Sometimes they have huge margins and have a good product. And you're like, why are you not selling more? And they're like, they just don't know how to. Yeah. So I think the most successful people are the people that look at businesses holistically. And I think as an entrepreneur, you need to understand your strengths and weaknesses, right? We're not all great at everything. I mean, maybe there's some people that are, but most of us are good at one or two things. And you need to bring the rest of the team that can put those or plug those holes for you and help you get to the next stage. And be humble and understand, like, look, finance is not, it's okay.
Yeah, it's okay to not know.
It's okay to,
And it's not okay to not know and then not find somebody who knows better than you.
Exactly.
So you exited the business. Talk to me a little bit about that, that exit, and what was the next stage in your life?
Yeah, I mean, it was a pretty straightforward exit. We actually, like the business in Mexico, after 10 years of running it, we winded it down. There was really no assets to be sold, so it was easier to just sell the contracts and cash out that way. The business in Central America, I had partners there, so eventually I exited to them, and I was ready to move on. It was a very interesting business. It was highly operational. At one point, we had around 10,000 employees across Mexico and Central America. So that creates, I would like to say, one issue a day. It's really like 100 different bombs that explode every single day. Like
10,000 is a lot.
It's a lot. I mean, I had everything from employees being, accused of murder and rape or being raped or being harassed, et cetera, to having one day showing up to my office. I'm 27, 28 years old. I show up to my office and there's a union outside of my office and we're on strike. And I didn't have a union.
Wait, that's like next level stuff. You had people who were complaining. They were getting raped and being accused of murder.
Yeah.
That's
well,
next level.
If you have 10,000 people in 8 or 9 different countries,
something's bound to happen.
Shit happens.
Yeah.
Yeah.
Well, I'm sure it wasn't a daily occurrence, but even just to throw that on your radar, that's more than most people see in a lifetime.
Yeah, I remember the one that was accused of murder was down in Central America, and apparently him and I think it was his lover, had killed the lover's brother with a hammer.
That's brutal.
Yeah, and so he was working at a supermarket, and the police showed up to arrest him. But of course, we are the employer, and we are responsible for him while he's in the store. So we get the phone call, and it's like, well, now we have to shut down the store. And it's like, so yeah, shit like that.
A lot different than what you're doing now.
Of course. Yeah.
So you exited that business. You rolled into the bigger, the now parent company that's acquired you.
Yeah.
And what was it that led you to DBD Partners when you started, you started your investment banking firm? And love to hear a little bit about your angle and how you approach clients in that space.
And I always say this, I didn't want to be an investment banker. First of all, I didn't know what investment.
But you're so dressed. You're dressed
I know.
perfectly for it today.
And I always did. Even when I was running a marketing business, I would dress like this.
If you're listening and not watching, he's in a perfect pinstripe suit with a nice white press shirt. He's got the tie perfectly tied. You know, he's got the perpetual calendar on his wrist. He looks like a iBanker to the T.
I always dress like this. Like if you see, there's pictures of me.
Meaning you're super handsome.
Thank you. When I was running the marketing business, I would dress like this. I never fell into the marketing outfit because I always knew I was a finance guy,
Right.
in the heart. And like a quick funny story, even though I never wanted to be an investment banker and I didn't know what investment bankers did, I remember perfectly watching, you know, when you're a kid, you watch the movie about whatever, the summer camp that's getting bought and they need to save it so that the rich guys don't take it.
Yeah.
And I would always see the guy show up at the camp on the limousine and wearing a suit, etc. That was the mean guy that was just buying it.
And you wanted to be the mean guy.
I wonder, like, how did he become that? Like, he obviously knows how to do this shit. And you know, it was. I always was more interested about how that person became that successful and able to do stuff like that than the whole drama going behind scenes. But
tell us a little bit about, because investment banking takes different forms or different shapes based upon the firm and what they focus on. Talk a little bit about where, what motivated you besides this, this image of the guy pulling up in the limousine and how successful he got. What kind of motivated you to form your firm and then design it in the fashion that you did?
When I first jumped into investment banking was I met the CEO and founder and chairman of a Spanish bank, ONEtoONE Corporate Finance. I think it's like the third or fourth largest financial institution in Spain. And I met him through YPO and HBS. And he had been trying to open a US division of ONEtoONE for, I don't know, a good 5 or 6 years. Tried it and failed. And he offered me to come work for him and start the US division. He knew I was in the process of exiting the marketing business and I was looking for a new thing. I was looking for something to help me stay in the US also because I didn't want to move back to Mexico. Love Mexico, great country, great city. I prefer to live in New York. So he made me the offer. I said no quite a few times because my impression of investment bankers were they're a bunch of assholes. Mm-hmm. And I didn't want to be an asshole. And I was like, no. And eventually he said, well, why don't you come to Spain and see what we do, meet the team, spend time with us, et cetera, and do it after summer because, in Europe, everything closes July, August, and see what happens. And I went there in September of 2015. And I think the first day I realized how little I knew about investment banking and how complex and interesting of an industry it was. And just when I say investment banking is the mergers and acquisitions, corporate finance side of things, we don't do any of the equities and trading and investment and derivatives and all of that. That's more what you guys do.
Right. No syndicacy stuff.
We're doing mergers, acquisitions, M&A and capital formation, capital right. needs. But yeah, I remember sitting there in a meeting the first day and being like, shit, like I don't know any of this. And it was a really fun challenge and I love a challenge. So after a week, I was like, yeah, let's do it. And came to the US, again, September 2015, incorporated what back then was ONEtoONE Corporate Finance USA, ran that business for 3 years, grew it. We had, we went from me and one analyst to being around 35 people in the US within 3 years and pretty profitable. I think we were at that point, the most profitable division other than Spain from ONEtoONE. And I loved it, and I learned a lot from ONEtoONE. And Enrique, I think, is great, and I consider him a mentor and a friend. But there was always one division on how we see things. His business model is what I call a volume business model. He centralizes all of the back office, et cetera, in Spain because it's cheaper, mm-hmm. and everything, it's standardized, right? Like if you see their books and their models, et cetera, it all looks the same.
Super cookie cutter, not customized.
Exactly.
Just like you come in, this is what you get. It's a number 2, number 3, or a number 4.
Exactly.
Number one, we discontinued. We're not doing that anymore. And pick your sleeve.
Pick your sleeve. And his logic is, in corporate finance, it really doesn't matter the model. It really doesn't matter how good documents you create, et cetera, et cetera. It's all about volume, go out to as many targets as possible, and eventually you're going to find somebody and you'll convince them to buy the asset, which it's true. And he's been doing that for a long time and very successfully.
You know, what's interesting though, I mean, I think a lot of business owners come to that point in their business where they go, I don't want to sacrifice what it is I do that got me so passionate about this to just increase my efficiencies and increase my profitability.
Yeah.
But at the same time, I'm running a business and I need to increase my profitability and I need to increase my efficiencies. How do I keep that same customization, that same high touch as I continue to grow? And I know we've been through a couple of different iterations and we've still been able to hold on to, our culture and how we work with clients. But I know a lot of, that to some people is like, all right, it's a switch. It's either on or off.
I agree. I just didn't like that model. And I don't know where the switch is on and off, because you can see firms like, when I'm talking about finance and stuff like we do, I always use like Goldman Sachs as the referent, because I truly believe they're probably the premier firm out there. And they're, I don't know, tens of thousands of people now and one of the largest financial institutions, and they still have that focus on quality and execution, and everybody in their firm has that mentality.
So they have like the dimmer switch. Yeah. Where they can, they can have that profitability, but they can also give that customization.
Yeah, exactly. And when they veered away from it a little bit in the last few years, it started to go down. And then they had to like, okay, let's go back to excellence, and change everything to get back to that.
So is that what you use as your benchmark?
Yes, absolutely. And I think that was a breaking point with Enrique. And I had the conversation with him, but like, I'm extremely obsessive compulsive. Like, I like things to be perfect. That's it. It's like, there's no middle ground. If I'm going to do something, I need to do it right. And I understand your business model. Like I understand his business model, but I wanted to build a US office for ONEtoONE where we would execute in a different standard, in a different model. Unfortunately, it didn't work for him and the board. And, after going back and forth, we decided to, and when I say we, because my current business partner and I partner up, decided to buy him out of the US, what we had created. And in 2018, we created DVD Partners. And with that idea, or DVD Investment Bank, we're rebranding now. So I should just use the new name.
So DVD. Give us what it stands for.
I love it and hate it at the same time, because it's very cheesy, but it works for double black diamond.
Because you're an avid skier.
I'm an avid skier. Greg is an avid skier too. And I think that's the only thing we really have in common, is that.
Other than your love for investment banking.
Yeah, exactly. But in our personal lives, we're completely different. He's a hot mess, and he has 4 kids and a wife, and loves living in the suburbs, and his life revolves around that. And I'm single and don't ever want to have kids, love living in the city. Like, we're completely opposites on that, but we both love skiing. And we were like, okay, we need to come up with a name. We need to incorporate, if we're doing this. And I was like, why don't we just call ourselves Double Black Diamond, DVD? And that's how we ended up with that name. And we like what it stands for, because at the end of the day, from a skier perspective, and when I say ski, I mean really ski, under control, really go down and enjoy a double black diamond run. It's a mix of technique and strength, etc. But you need to do it right. Like, you need to be focused. You need to have the right skills, the right gear, the right mindset, be in the right shape, etc., to actually be able to ski it, right? It's a difference between seeing somebody that goes down a black diamond and just like, it's.
Yeah, you're at the top, now you're at the bottom. Great job. But did you execute on your turns? Did you control yourself on the way down? If you needed to stop, could you stop on a dime?
Exactly. Or redirect, or like, are you doing like, you can see somebody that really skis. It's a nice fluid line pattern. And then you see the person that's like, brake, turn, brake, slide, brake, like, which, hey, all power to, like, both are skiing it. It's just, are you able to really ski it? So that's where the name came from.
So that seems to embody your need for perfection right there.
Yes.
When has that been an inhibitor for you? When is that, like, you know, when can you identify that need to be perfect has actually caused more friction in your life than helpful? Because I could see both sides of it. I'm just, you know, curious what your experience has been.
I think the main place where it creates frictions is interacting with other people, because, like, what's perfect for me might not be perfect for other people, but, you know, it's usually the way I want it, the way I need it. So I think, like, even in, like, personal relationships with friends and you know, with my girlfriend and etc., that's where it becomes more of a impediment than at work. Because at work it's just execute, and I actually don't see how it can, or how it has affected in work, other than, again, sometimes having those relationships with people at work where they don't understand, well, like, it's not good enough. It's like, well, there was a mistake in page 125 of 200 of a 200-page document. There was a mistake. Like, there shouldn't be a mistake.
I share the same characteristic, right? I sometimes want everything to be perfect the way I want it.
Yeah.
And I think that's, you know, business owners' plight, and why we run our own businesses, because it's the way that we want it, the way that we view as perfect. True. And it could sometimes drive people around us crazy. It could sometimes slow down the process. It could sometimes make things a little bit more difficult than it needs to be. But back to the business owner's plight, it's my way.
Yeah.
It makes me feel like we either took the step in the right direction, or, because I also like to live my life without regrets. If I'm doing it, I don't want any regrets. And if I'm not doing it my way, then I feel like there should have been more effort or something put in to get it to be done the way that I wanted to do it.
Yeah.
Or talk me into a reason why it shouldn't be. Because maybe not my way is not the best way all the time. But if you can't tell me otherwise, then we're not going to do otherwise.
Yeah. No, I like that. It's like, convince me it's there. And I agree. Like, if somebody can say, hey, why don't we do it this way? It's going to be faster. It's going to be because X, Y, Z. I'm always open for it. Like, but just give me a better way of doing it. Don't tell me we can half-ass it and get away with it. That's what really pisses me off. It's like, yeah, we can do it quicker. Well, but is it quicker and better, or is it just quicker? Because if it's just quicker, I don't want to do it.
Well, and a lot of times we're decisive people. When you're a decisive person, it's like, I just have to make a decision because nobody else is making the decision. So I'm making the decision. We're moving forward, and this is why we're doing it, because this is just we're moving the ball forward.
Yeah, and sometimes a bad decision is better than no decision.
Well, no decision is still a decision to not do anything.
That's true.
Which then becomes a bad decision.
A worse decision.
Yeah, sometimes. So you started DBD, now investment bank, right? Rebranding, going through the rebrand. Talk to us a little bit about where you find your perfect fit. Like, if you had an ideal client that was going to come to you, what do they look like? What do they sound like?
There's so many different perfect clients for us. It's hard to put it in one bucket.
So give me a couple. Give me, like, what are the types of people that you typically see that come across your desk where you're like, that's fun, or that's like the perfect mindset, or it could be a characteristic. It doesn't have to be a business type. Like, what, where do your juices get flowing when that person or that group comes into the door and is looking to hire you?
I think the best way of, like, putting it in one bucket is a business owner. And when I say business owner, it can be a group of, right? Like, it can be a family business. It can be partners. It can be a financial firm that owns, like, a business owner that is going through a strategic transaction, right? That can be selling their company. It can be buying a business, or thinking about buying their competitor, or maybe they want to vertically integrate. They're thinking about doing an acquisition, or they know they need money to grow, but they don't know how to get it and where to get it from, etc. So that's kind of who we're serving. The ideal one is somebody that understands that what we do is very specific and requires a set of skills that you don't usually have in a company.
Explain that to me. What are those skills like, and what is it that you guys typically will bring? Because I'm guessing the scenario is, hey, listen, some people go into their business saying, I'm going to have an exit at some point. Some people think they're going to die in the business. Some people say, next year I'm selling it, but I really haven't given any thought to selling it. You've got all different types of people that are out there that end up transacting in some way or another, where they're going to either sell or buy something. That's a business or their business. What is it that you guys kind of go into your, to your conversations that people tend to miss? That's your true value prop that brings, that brings the transaction to a close quicker, better, more money, whatever.
And to your point of people are really good at their business earlier, when we were talking earlier, people are really good at their business, and maybe they're really good at selling what they do, right? Selling their widgets that they produce, or the service they produce, et cetera, et cetera. There's a huge difference between selling your products and services and selling your company. You're talking to a complete different market. You're to a complete different profile. And that's what we are great at. It doesn't really matter for us. And I truly believe that in middle market investment banking, you can be a generalist, or you can cover multiple industries without a need of having a specific vertical where you focus, and then that's the only thing you do. Because at the end of the day, what we're really good at is understanding your business really quickly, and then being able to translate what your business, your key metrics and what your business differentiators are to buyers and lenders. And when I say buyers and lenders, it's because if you're buying a company, you're going to need capital.
Yeah.
And you also need to sell your business to whoever you're buying, because they need to be like, why should I sell my company to you? And that's what we're really, really good at. And it's that, and putting all of that in writing and in numbers. One thing that we sometimes face quite often is people saying, well, I have a great CFO. We have great numbers. We have a great model. Like that's taken care of. And the reality is, yes, you have a great CFO that understands your business very well and can project your company for you and your board, et cetera, et cetera. 9 out of 10 times, we need to rebuild all of those models from the ground up so that a buyer or a lender can understand them and we can defend that in front of them. Because your CFO has been building models to get you excited and to get your board excited and to kind of predict stability with history.
Mm-hmm.
And we need to be able to build new models that can predict that stability, but also show spikes and growths. And most importantly, how are you going to work on a downturn, which most CFOs never want to think about, and show all of those different things to lenders and buyers.
So what do you define middle market as? Just so this way we can get a...
Yeah, that's a great, companies that are below 300 million of enterprise value. Okay. That's what we call the middle market.
Okay.
Which is, you can find as many definitions of middle market as you can find banks serving it.
And what do you typically see your average size businesses that you're transacting on?
I would say, like, EBITDA wise, our companies are doing anywhere from $4 to $10 million of EBITDA. Okay. That's kind of our average. But that being said, we've had great fun and success doing deals with companies that were a couple of $100,000 to sometimes even EBITDA negative or flat. But
the revenue multiple was just high because of the type of business that they were in. Yeah.
Or they had a very
growth trajectory or something like crazy like that.
Exactly.
What when you take a look at kind of like most business owners that you're coming into the mindset of like, listen, it's time. Or maybe it's not time. Maybe they're not. Maybe they haven't been able to make a decision. What do you see that most people are making mistakes on? Where do you see that they tend to trip and fall a little bit? Whether it's in how they're executing on their business, or how they're looking at the sale, or what do you see the common space being?
The main thing we see a lot is they wait too long to make the decision, and by the time they do it, they call us and it's like, hey, I want to exit my business in the next 12 months or 16 months. We're happy to take them to market, right? But if they had thought about it 36 months ahead of time, sat down with us, sat down with people like you, sat down with their attorneys, sat down with their accountants, they would have been able to have a way better outcome of the transaction. by doing small things. Everything from preserving wealth, and you can set up trust and you can move, equity from one side to the other. You can, if you're already thinking about leaving money to your kids or maybe your charity or your church, do it ahead of time.
Well, there's a lot of strategy that you can put in, but the problem is that strategy is not something that you can execute on in a short period of time, because usually time is what's against your, what's not on your side in those types of transactions. I mean, even if you're doing it to not sell, it still takes a couple of years to put some of these things into place and get them executed on, just because the mechanics of it are time consuming. It's not that it's necessarily that difficult. It's just that it takes time.
Yeah. It's mechanics and legalities, right? There's some stuff you can't
just processes that you have to follow.
Exactly. So I think that's the main thing is give yourself 36 months from starting the process to exiting the business. Our process is going to take 8 to 10 months, right? We are the quick go in, kind of special forces, go in, execute the mission, kill, get out. 8 to 10 months. That's how long it's going to take for us, especially on an exit. But you should start talking with your investment bankers 36 months ahead. They should have a conversation with us 36 months ahead. And we would refer them to people like you, and again, attorneys, accountants, start working on all of those things so that by the time we actually close that deal, you had all of the scaffolding in place to really preserve your wealth and think about the future. So I think that's the main thing that we find a lot of times.
What's the biggest thing that gets you jazzed up about this whole process?
I mean, I think honestly, learning so many different businesses and learning, even in similar businesses, even, we've sold a lot of companies in the same industries, et cetera, how different business owners are. And how once you start meeting or learning about the business owner, you can still, you can see how that trickles down into the corporation, into the culture, the kind of people they chose, the kind of decisions they made, the quality of their product. It all comes from that entrepreneur that at the end of the day is the head of the business. And that's my favorite part. Yeah, I love negotiating, for example. That for me is super fun. And I love when we get to that point where, you have 5-10 offers on the table and you start strategizing about, okay, how do we get this guy up or this group up? And what are our key concerns? And the strategy on the back is like, okay, well, let's keep this other offer hot because we can live with this one, even though it's not the best, but we know this one doesn't have that much room to improve because of how the group is structured, et cetera.
Or maybe it has less hair on the deal. It's going to be a little bit easier to execute, whatever that deal.
Quicker to close or whatever it is. So let's keep this one as our safety and let's start pushing these ones to see, because this one might be riskier and has a little bit, but if we can get them to 150 million instead of 100, well, the risk is worth the reward, right? So that's super fun.
Are there any deals that have been fucked up that kind of keep you up at night that you still think about, or anything that you remember just being an odd situation that you guys had to work through to figure out how to put this thing in play?
There's a lot of odd situations that we have closed. And, one deal we were, almost 36 months in, we refinanced it and had to put some bridge lending in, et cetera, et cetera, et cetera. And we closed during the pandemic. And I literally think it was 3 or 4 days. If we didn't close a deal and refinance it, the company was going to be out, and around 700 people would lose their job, and et cetera, et cetera. That we got to close it, and that one is probably one of our best deals, and that we feel more proud of. And the company was about to go bankrupt. They're trading now at $18 million of EBITDA.
Oh wow!
So
it's a big swing.
It's a super swing. So that
now, was that a strategic sell?
No, it was a refinancing. The company
just a refinance.
It's 100% privately owned. That one was really fun and really stressful, and we had to negotiate with different parties, etc. Once we were about to close a deal, for example, and I think 2 weeks before the closing, the buyer calls us and is like, "We're walking away from the deal." And we had been working for this for a good 12, 14 months.
Right. It's in everyone's best interest to keep the ball rolling.
Absolutely.
And they want to pull the plug.
They pulled it, and I couldn't get them on the phone. And I finally got on the phone with them. And I'm like, what happened? And it was like, we just found out that your client acquired assets from a third party, and that third party is being sued for fraud. And your client is accessory to that because apparently he knew that those assets were incumbent by the party, and the company buying them was a publicly traded company. We're like, we don't want to touch that.
No, that's sketchy.
There was no way we could have known that because we ask all of our clients, is there anything we should know, blah, 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 blah. And the lawsuit was filed 3 weeks before close. So that's how the buyers figured out in their last diligence. They were like, no, there's a new lawsuit that just came up. So that one still keeps me up because we worked along, and it was a great deal. It was a great company. It would have been an amazing strategic buyer for the company, the product, the technology, et cetera. And unfortunately, and those are the kinds of things that company had patents that created a great composite for construction, et cetera, that are probably going to be lost because of this whole thing. But I also understand the buyer. There's like, I don't like.
Can't touch it with a 10-foot pole.
Exactly.
I'm done. I'm out.
Exactly. Yeah.
So where do you see the industry going? Like what's the ambition for your firm? Where do you envision taking this?
The industry, I think, continues to grow, and it's just going to continue. We have a huge generational shift that's been widely documented. Baby boomers, early Gen Xers that started their companies and are being forced to a certain degree to exit the businesses because there's no succession planning. If we had 2 hours, we could discuss about new generations, et cetera, et cetera, et cetera. But the reality is the kids don't want to take over the business. Or sometimes the parents don't want to let the kids take over the business. And they have to exit those companies. Those are the companies that are actually running the economy in this country and in multiple countries. So I think the industry for the next 10 to 15 years is going to be extremely active. I think we're going to see more and more mergers and more exits, et cetera, et cetera. And we want to be a fundamental player in that arena. The hardest thing for us is, at the end of the day, just like your business, we're a service business. And we're just as strong as our people. And that's the hardest, but at the same time, my favorite part of business is a recruitment process. Is finding everything from the young guys, recruit them right out of college and build them and groom them and train them into being investment bankers within our culture and our standards, et cetera. And then also finding those executives that are outside of the industry, like we did with Michael, et cetera, and bring them on board and teaching them the new skills so we can continue to serve all of these business owners. My biggest, I would say, fear is business owners end up being underserved. And it was kind of like one of the main drivers for us to start DVD Partners, is that we saw all of these business owners being underserved by either very small firms or by business brokers that are not equipped to really extract all of the value of the business. And they're not equipped to have conversations with strategic or financial buyers to the same level, which sometimes strategic and financials love that because they can take advantage of the situation. But that's my biggest fear in the industry, is a lot of people jumping in that are not correctly equipped to guide business owners through a very complex process, and a lot of value being left on the table and taken, by the buyers and so forth.
Any shifts that you've seen outside of just the demographics in terms of how people have been evolving in their own businesses? Because you talk about prior generations, you talk about newer generations. Obviously, technology becomes a key player in that. How do you see that, maybe that lack of technology, or the disparity in understanding technology, affecting your market or your ability to trade in the space? Like, do you see that younger people don't want to buy older people's businesses because they're just not integrated into technology? Are they looking at that as an opportunity because now they can digitize a lot of stuff? Are they taking on those challenges, or are they just taking it from the start and going it out on their own?
I think there's two sides to that, right? The smart ones figure out there's a set of companies that are outdated and out of touch with technology, et cetera, et cetera. And there's a huge opportunity to take that and turn it into more profitable businesses, et cetera, et cetera. And those are the younger people, but they're called entrepreneurs by acquisitions, EBAs. And there's a lot of business schools, et cetera, that are pushing ETA, entrepreneurs through acquisitions.
Through acquisition.
A lot of MBAs, programs, et cetera, that actually push this and have funds to do it, et cetera. And they figure out, hey, I'm going to go buy a small manufacturing facility in Ohio and bring it up to speed with the new technologies and AI and purchasing and et cetera, et cetera, et cetera, and really take it from 100 to 1 million in a very
short period of time. Yeah.
Short period of time. And they're seeing that opportunity. There's the other people that unfortunately just want to get rich quick. And they spend all of their time figuring out how to create a new app that they can have $1 billion valuation within 5 years and then exit the business and don't worry about it. So that's where I see that division between the cultures, right?
I mean, that's super interesting. So are these ETAs, are they going in and are they paying fair market value for these businesses? Do you see that they're usually paying up because of the potential? Are they getting them for a discount? And if they're getting it for a discount, how's that conversation going with the exiting business owner? Because I can only imagine you're selling your business and now you're being told you're old and antiquated and you're not worth as much, being a deflator in that whole process. What do you see that landscape looking like?
If they're overpaying, underpaying, or paying for market value, it has a lot to do with the process you run and the people you have running that process for you, right? I would like to say, and I truly believe nobody underpaid for the companies that we take to market because we understand what the value is.
When I say underpaid, I mean, like, if I'm a business owner and I say, my business is worth $5 million. And why is it worth $5 million? Because I know a guy who does exactly what I do, and it's $5 million. He got $5 million, so I should get $5 million. Then you go and you go, yeah, you know what? You have this similar revenue, you have a similar business model, you have a similar client base, but you're antiquated as shit, and your costs are high, and you're not really running the best business. So I don't care. I want the same number.
We get that all the time, and it's hilarious. It's like my company's worth 8 times EBITDA. Why? Because my golfing buddy that also manufactures just sold his company and they paid him 8 times EBITDA. And my company's as good as his.
Yeah.
So okay.
Of course.
Tell me a little bit more. Like could be the case. You have huge client concentration. You have huge exposure to commodities. You have, maybe he was selling, maybe he was manufacturing something different. Maybe he had a huge, or his client base was very diversified. Maybe he was sole source for most of his clients. Maybe he was completely vertically integrated, and that gave him that. The fact that there are 2 manufacturing businesses doesn't mean they worth exactly the same multiple or they're going to get to the same valuation. But we get that from business clients.
And there's so many different variables that impact that. So how do you have the conversation with somebody that says, I believe my business is worth this, and they could be a good client for you, but you just have to kind of convince them that what you're saying is the truth, even if they go and they talk to 4 other people, or if they had talked to 4 other people, they're probably hearing the same song. How do you get them to finally? There's 2 parts to that, right? Somebody that's completely set in their ways, and kudos to them, etc. I don't want to spend time convincing them because they're not going to be happy with the process. At the end of the day, I know the company can fetch a X valuation if they think their valuation is X plus Y. So it's just it's not a fit, and they're gonna buck the system the entire way.
Exactly. And we've had that happen. We had people that got an extraordinary offer for the business, but it wasn't the number they had in mind, and they walked away from big, like 9-digit offers.
So what are the couple things that you look at in your business when you start to think about just are you the shoemaker's wife? Do you just kind of like, you kind of run your business as you see it, it going from day to day? Or do you look at it the same way that you advise your clients? And what are those metrics that you kind of focus on to make sure that you're going in the right direction, if that's the case?
I always tell my clients or people that come to me and think like, if I want to get the best value from my business, what should I do? And I always tell them, run your business like if you were going to run it forever, because great companies are bought, they're not sold. So you need to run this business as if this was the business of your life. And then eventually, if you want to exit it, there's going to be something to be sold or something to be bought. But don't think about what you need to do right now to sell it in 10 years. Or like, don't start your business or don't run your business to sell it, because you're going to start cutting corners. You're going to start doing stuff more for creating value. It is. So that's how I run my business. Like, we're thinking about this 50 years from now, 100 years from now. What is our legacy? What does the business look like without me, without my business partner? Once we're all gone, how is this a going concern? How is this a business that stands in time? And that's how we look at it. And I love what I do, so I have no intention of retiring. And also, I'm incredibly lucky that it's not a business where age becomes a factor early on. I think you can be a great investment banker in your 70s and in your 80s.
Well, especially with probably the amount of experience that you'll have when you're 70 or 80, you can't buy that.
Exactly.
You could just hire you.
You can exactly
when you're 70
or buy the company, right? But yeah, you won't have the energy that we have right now for working 12, 20-hour days sometimes, right? Like sometimes you work Monday to Sunday and maybe sleep a couple of hours per day, etc. You lose that. But at the same time, you have people doing that, but you have that experience where you can look at something or you can just guide them in the right direction in 2 minutes.
Yeah, I mean, it's funny because when we talk to clients about this type of stuff, right? You look at what is going to be the highest value creator. And when it comes to KPIs, like, you need to understand what your numbers are. You have to understand what your metrics are. You have to have an ideal, but you also have to understand where you are in your growth cycle. If you're in growth, you're not going to have the same metrics as when you're ready to sell.
Yeah.
You're going to be spending more money. You're going to be gearing up for that growth. You're going to be reinvesting dollars. And I think the hardest part for me is, one of the things that you hear from, you name the talking head, it's creating a business that you become antiquated. Not antiquated, but you become not needed.
Yeah.
Right? The business that runs without you. But when you love what you do, it's like, well, how do I make myself, obsolete, so to speak?
Yeah.
How do I how do I create a business that runs without me? And then what do I do?
You become the chairman.
Yeah.
You're still there, but it doesn't need you.
But I think that's where a lot of people get caught up is but I love what I do. And it's, we have that conversation of, all right, well, pick the things that you really love to do.
Yeah.
And maybe maybe the company's obsolete without, that set of skills, but hiring the right people around you so this way you can grow to where you need to go.
Yeah.
But emotionally, that's hard, right? I mean, you see a lot of people, the emotional component of what you deal with. No?
It is. We see that all the time, and we see people getting to that end of the process, right? 8 months into it, and an amazing offer on the table, and they wrap their heads around the number, and they know it's a life changer, and et cetera, et cetera. I'm not going to say every single time, but more often than not, there is a call, a Saturday at 9 p.m., a week or two before closing the deal. Hey, Iliya, is this the right thing to do? Like, it's a great number, et cetera. I promised my wife I'm going to retire. She's ready to move to Florida. She's done with, the Midwest winters, et cetera. But like, is it the right thing to do? And the reality is, it's not a question we can answer. You were there to hear them and maybe ask the right questions, like, well, do you think your legacy is protected? Do you think your employees are going to have a good future? Do you think they're better off with a transaction than without et cetera, et cetera, et cetera? Guide them. But at the end of the day, it's a very emotional decision. People work 20, 30, 40 years building their businesses. which was very different. Like to your question earlier about the generations, I think people, our parents, and we started businesses with the idea of this is my life job. This is my legacy, and this is what I'm going to do this is what I'm doing with my life.
It almost becomes part of your identity.
Exactly.
It's not like what you do, it's who I am.
Exactly. And I think newer generations don't have that. Newer generations start businesses just to cash out. And that's where I think there's a breaking point, because those businesses don't have the passion and don't have the intention of those older, more established businesses.
Well, and that's a huge opportunity for the people who do want to run it with the passion.
Yeah.
Because that aggregation and that all of a sudden the sizable companies start to lose that touch and feel, kind of like what we were talking about at the beginning, right? Yep. Customization versus the rinse and repeat process.
Yeah.
And more people want to feel like they have that human connection, because we've lost that human connection in so many other ways in our lives.
Yeah.
That when we are scared or, we are anxious, or it's not usually the greedy side. It's usually that the resistance to wanting to move forward, but knowing that logically it makes sense, right? The numbers make sense, but for some reason my head and my heart aren't in alignment right now with my stomach.
Yeah.
Like I'm feeling like that. Iliya, is this the right thing to do? Should I be selling my business? My wife, she doesn't like the Midwest winters anymore. She wants to go someplace warmer.
Yeah.
That emotion starts to drive the decisions. How do you typically, asking questions is something, but I mean, do you ever deal with that on the front of things? Like, hey, listen, this is going to be an emotional process for you.
Oh, of course.
Let's throw it on the table right now and start to deal with some of those questions and issues. Or
absolutely. Absolutely. From the get-go. I think one thing I do, and I know my team does, et cetera, is when we start talking about a transaction is sit down with them, or do it over Zoom. Nowadays, there's a lot of times we're doing transactions fully virtual, et cetera. Write down your number and write down your reasons, because there's going to get a point in the deal where you're going to get greedy, right? You told me you needed $40 million. Then that was your number. And the offers start coming at 50, 60, et cetera, but then there's adjustments because of cash flow. And the number comes at 42, and you were expecting 50 because there was an offer at 50. And now you're like, oh my God, like I can't sell for this. Like 6 months ago, you told me 40 was more money than you
would
ever
have been
need.
Skipping out the door if I gave you 46 months ago.
Exactly. But now, so write down that and write down what are your and the other stakeholders, like your business, like your employees, like maybe they have a better future by selling the company, because your president or your chief operations officer, whatever, is going to become the CEO and he's getting equity. Are you willing to give him the equity? Are you willing to share the ownership with somebody else? Like they're getting an opportunity to advance in their careers. So write all of those things down. And when you get down to the wires, like, did you write them down? Well, go look at that. And that helps a lot. And I think that's something that people, when they're thinking about exiting a business, should do as an exercise. What's that number? And that's a question I can't answer. You are way better equipped than I to do that. Like people can come to you and sit down and be like, Bobby, how much do I really need in my bank account to live the next 25 years of my life and continue to maintain my lifestyle?
I think it's almost a great exercise just in anything you do. I mean, write it down, put it in a drawer, come back to it, and benchmark versus what you wrote down versus that floating, ever changing, whether it be number or ideal. I mean, even just like, from a positive affirmation, people put positive affirmations in their pocket. So this way, when they, they're feeling like, oh man, I gotta get my mind reset. They read their positive affirmations just to, what is that? A Think and Grow Rich? Yeah. See,
I do it. So I don't know where to do it. I read it somewhere and I do it.
Yeah. Even just that reality check.
And gratitude.
Gratitude. Yeah. Where are you in life? Do you feel good about where you are? You may not feel good about it now.
Yeah.
But what was it that you thought about a year ago? And can you look at it and say, all right, you know what? I'm not that far off, or I'm way ahead. I didn't realize that just so many variables came to change my anticipation of what I should be and where I should be.
Yeah. And stop comparing yourself against others, because that's a huge thing that happens, right? Like, oh, my neighbor just sold his company for 200 million. I can't sell it for 50. To your point, well, 50 years ago or 20 years ago, if I told you you're going to have $50 million, you would be ecstatic.
That's right.
Who cares how much money they got? Think about what this changes your life and how that moves.
You know, for the people who do, it's like, use it as a positive driver. Use it as a way to say, holy shit, they just sold their business for 100 million. How do I get my business to be worth 100 million? Not I should be, it's how do I, right?
But sometimes, unfortunately, business can't be worth that. Like, unless you're willing to, okay, are you going to like tighten your belt and you're going to reinvest all of your earnings for the next 10 years and take a lot of risk? Because that's part of it is like, okay, are you willing to take all of the risk needed to get you there? You can get there for sure. Any business can get there. Are you willing to take all of those risks? And sometimes the answer is no. So why don't you just find a good partner, sell them 70, 80% of the business and retain 20 or 30 and risk that 20 or 30.
Yeah.
And with the right partner, that 20 or 30 can be worth as much
as the full 100 before.
Exactly.
Yeah. Taking the chips off the table can sometimes be the smartest move.
Yeah.
So listen, if you were to leave here, given kind of like your 3 business truths, 3 things that business owners should just hold as their truths as they start to think about either growing their business or exiting their business or giving their business to their next generation and succeeding it down, or selling it to their key employee because that's the most likely fit. What are the 3 like absolute truths that you would leave for them as you see business for yourself and for your clients?
The first one, and it's, I think, probably a business cliche, but it's so true. Cash is king. I don't care how big your business is. I don't care what your revenue is. I want to see what the bottom line looks like. At the end of the day, that's the real metric of health of a business, is the amount of cash they're able to produce. So cash is king, and focus on that, being cash flow healthy, at least throughout the business. And if you're in a point where you're cash flow negative, it has to have a reason why, but you always need to be striving for cash flow.
Some sort of a reinvestment with an ROI, is that, that typically what you see?
Yeah. And to your point earlier, like, I can see a company growing that might be burning through cash, but it's making the right investments and there's a pay to that. But when you see companies that are just not profitable and they're growing themselves into bankruptcy,
that's not good.
That's not good. And it happens more than you think. People, once I get I'm losing money now, but once I get to this size, no, you're not.
Well, because everybody thinks they're Jeff Bezos.
Of course.
Of
course. Yeah. Or Elon Musk or whatever you want to put it there. It's like, no, you're not. Like, you're going to continue. So that, like, cash is king, and look at your business from a cash perspective. How you do one thing is how you do everything, and really
I like that.
Look into that. And usually that's where companies are breaking down.
That's said by the perfectionist. I get that. I love it.
And just because I'm in finance, I would say spend less time looking at your P&L and more time looking at your balance sheet.
Okay.
And learn how to read your balance sheet.
And why do you say that?
Again, because that's where you can see the cash generation of the business and the real health of the business, the assets, the liabilities, and the equity value of the company. Not just how much money is going through the business, but how much money is staying in the business.
Right.
How you're building value.
How much you're worth versus what your costs and your revenue against each other look. Yeah. So listen, dude, I appreciate you coming by. I know your time is valuable. I wanted to just make sure that our listeners had an opportunity to find you. How do they find you if they're looking for you?
Sure. They can shoot me an email, Iliya, ILIYA, @dbdpartners.com. Go to our website, dbdpartners.com, or DBD Investment Bank. No, dbdibank.com. That's the easiest. LinkedIn, Iliya Zogovic. There's not a lot of us, so
we'll have all those in the notes, just so this way you get the spelling right.
Exactly.
Well, dude, I appreciate your time. Thank you again for coming by. I think this was awesome. I mean, the insight that you have, it's just your own experience of going from buying a marketing company, coming out of, starting in college, and then being able to buy, sell, get into investment banking, then buy the branch that you had developed in the US, creating DBD and helping all business owners that you've helped, get through to their promised land or find their right acquisition, or in that one case, refinancing themselves to being able to not only tread water, but or stay above water, but to succeed and thrive.
Killing it. Yeah.
those are all great stories. And I think, if you're looking at your business and you're trying to think about how do I get from where I am to where I need to be or want to be, conversation with you is definitely something they should have.
Love it. Thank you.
Thank you, buddy. Appreciate it.
Appreciate it. Thanks.